ICICI Prudential team. I represent the product team, and I look after the managing the active and passive funds for Prudential. Last year, as you all are aware, that the pandemic has given us a lot of learning, both from the way of living and both on the way of investing. The way the equity markets have been performed in India and globally, there were certain jitters in the early last year, and now you see that the markets are moving towards all-time high from the Indian market standpoint. And there were other changes which happened where the passive funds have gained a lot of traction, not only globally but in India also. If you have seen that there are many passive funds getting massive inflows. With that logic, we launched this NASDAQ 100 Index Fund, and as you are aware, we are pioneers in the passive space also, apart from active. We have more than 18 ETFs, and we have more than 4 index funds. So to diversify the ETF and the index space, we thought of launching the NASDAQ 100 Index Fund. One second. Change the slide. Okay. So what is the logic of launching this particular product was from an Indian standpoint. As we all are aware, the Indian market is currently trading at all-time high valuation compared to other emerging markets. See, global markets from both risk and return point of view gives you a better chance for diversification, as well as there are certain pockets of companies which are there globally have a good growth potential. So the combination of diversification plus growth, plus there is a benefit of currency play with this global markets help a particular investor to provide that all combination of all benefits. That's the reason people prefer to go globally. So they want to have a better risk reward allocation, as well as there should be a currency play. This allows investor to take benefits through global market. From a global market also, there are different countries which perform differently. So from the slide, you can make out that India in last couple of years have done pretty well, apart from 2015. And if you see the performance right now, India is outperforming other markets very brilliantly. But if you see other markets which are more on the EMs, that is emerging markets, they are quietly undervalued, as well as they have not performed as compared to India. From a US standpoint, if you see US performance, US has been always a pioneer in growth. That's the reason their performance has been reflected in their the returns of their companies. So basically, US is already the market which is more developed and more evolved. Taking that as a base, we thought of launching the NASDAQ 100 Index Fund. Now, the name specifically says that what is the index all about. It captures top 100 companies by market capitalization, and it includes only the companies which are not from the financial sector. So it is an exclusion of non-financial companies. So it is a combination of technology plus consumer-oriented fund companies. NASDAQ 100 Index Fund was launched 15 years back. When it was launched, that time the NASDAQ indices created 2 index. One was NASDAQ Financial Index, and other was NASDAQ 100 Index Fund. So the NASDAQ 100 Index Fund is more tech-oriented, and NASDAQ Financial Index was only specific to financial services. But if you see the performance-wise, NASDAQ 100 Index Fund has outshined other indices, global indices. The reason being, the technology plays a very important part in growth of an economy, as well as a growth from a company growth standpoint. Reason being, the technology tend to be evolved. There is an evolution, there is a research, there is a lot of activities going on. Like I said, last year it was a learning edge for each and every one, because technology played a vital role. Be it right now we are doing a video calling, that is possible because it is more or less because of the technology. Yesterday for 1 hour WhatsApp was switched off. That created so much of hassle in the globe, because WhatsApp is the only way of communication which we can think of, with to connect the people. So these all are the integral. All these companies are integral part of our day-to-day life. So people are very used to these companies. The growth of these companies also depend upon the consumption of people. These companies are well recognized globally. So I am not only talking from an Indian standpoint. Facebook, Google, if you see Zoom, everything is accepted globally. So there is a wide global acceptance of these companies. So I'll just deep dive into the index more. Again, going back to US, US is as you all know, it is a developed market, and it has got highest market share compared to other markets. So from a US standpoint, all the companies which are listed in US doesn't mean that they have presence only in US. So they are globally recognized. I took few examples like Facebook. If you know about Amazon, it is globally and very well recognized. The company setup might not be in US, but the company setup can be anywhere in the world, but these companies are listed in US. So basically the US is more developed market, it is more efficient market, and the companies which are listed there are also very well recognized globally. From a currency play point of view, as I said, global investing, the most important part is the currency depreciation. So investor who are keen to look at a currency depreciation can play, can consider investing globally. Okay, so I'll just go through the top 10 holdings of Nasdaq index. So most of the names which you see on the screen are very well known, and it is a part of your day-to-day life, like Apple. So the core important point here is these all companies are more into innovation. Like we all know that Apple started with a normal phone, and now they have wide range of products coming from iPads to iPhone. So every year they launch a different version of iPhones. So the revenue generated from these companies because of the innovation is been very evident, and people accepting. So Apple has been, if you see the iPhone 13, which has been launched recently, there are people, even though it is expensive, there are people who are very keen to buy this product because the efficiency of the product and the deliverables of this model is more appreciated and accepted by the audience over globally. From Microsoft, Amazon. So Amazon, if you know the background, Amazon started with a bookshelf model. Now there are a wide range of products which Amazon is offering, including there is a proposal of Amazon coming up with an agriculture kind of model in India, which can generate revenues to Amazon. So basically these all companies are more into research and development. They spend a lot, like 80,000 crore they spend on the research and development. That might not be even the market cap of any of the companies in India. So the time, the effort, the money which has been spent by these companies for innovation, because they know that these innovation will help the consumption growth, and this consumption growth will in all increase the sales for these companies. So if you see the Nasdaq 100 performance from 2012 onward, the performance of these companies have benefited the index also. So from 2012 onwards, because these companies started doing their innovation research activities from 2012 and 13, when they gauged the market and they understood that these would be more technology oriented. And if you see, one of the example which I wanted to raise here is Tesla, which came into the index in 2014. The Tesla model right now is more on EV oriented, which is more widely accepted because it is more environmental friendly, as well as a self-driving approach, which is most appreciated by the Indian audience also. The thing is, these companies are more into innovation. They know the customers' requirement, and accordingly they create the product that in turn helps the sales growth of the company. So if you see the growth of Nasdaq 100 is been very evidently seen in the performance. So I'm not talking about only top 10. There are companies like Zoom, Starbucks, PepsiCo in the index, which are more evolved and more environmental friendly also. So Starbucks was the first company to come up with a paperless approach. No plastic based approach. They came up with their all their materials which are created on paper. So Starbucks is also one of the example. They are more environmental friendly, they are more revenue generating. So this revenue generating helps the performance of the index as well as the performance of the company. Again, coming back to the index constituents and the index construct, as I highlighted, that Nasdaq was launched in 2015 and 2007. At that time, they came up with two indices, which was one was pure financial based and other was technology oriented. So we are highlighting the technology oriented where there is no financial companies. The index has near about 100 companies, and there are 102 constituents because there is share class C for Amazon, and there is one more share class for the other security. As we know, these companies are very well adopted and very well accepted in Indian context, and it defines our modern day of living. If you see the performance wise and the market cap of this particular index, it is near about the market cap of the index is near about $18 trillion, which is way ahead from our Nifty market cap. Even if you see the performance wise, as I've already highlighted, the index has done pretty well compared to the Indian and the broad market index, which is S&P 500 US. From the rebalancing point of view, this index is being rebalanced on annual basis, so which happens on the third Friday of every December. So it is annually rebalanced. Last year there were 6 companies which were replaced in the index. These were basically not from the top 10 holding. These were from say bottom 30. So the reason of the rebalance and the way the rebalance is being done in the Nasdaq 100 is it is a bit unique from any other index rebalancing. They take into consideration the market cap of the company before including that particular company into the index. Why that is different and why that is important? The reason being, for example, Tesla got included into S&P 500 just recently, but in case of Nasdaq 100, it got included in 2014, and now it is a part of the top 10 holding. The market cap of Tesla increased because of the revenue which the company has generated. So if we create an index which is pure market cap based, it allows the index to have the particular company into the universe, and that also helps in the performance of the index. So the Nasdaq 100 is beautifully constructed in such a way that all companies from a market cap point of view has been included in the index. So that was one important thing. The second important thing is the rebalancing which happens, which is an annual rebalancing. It happens once a year, and there are companies which come in. The companies which are coming in are the next leaders. So when I said that there are 6 companies which are coming, they can be future leaders from innovation and technology standpoint. So that allows an investor to benefit from the growth of these companies. So these were the broad highlights of the index, and the performance, you can see it over a period of time. The performance is very good. From calendar return point of view also, more than 5 times Nasdaq 100 has given a better performance compared to say Nifty and S&P 500. But from a risk return point of view, Nifty has been performed over most period of time, including right now. If you see the performance right now, that is the YTD performance, Nifty is giving a better return compared to Nasdaq. So from a risk and allocation point of view, our suggestion would be that there would be certain portion which you can invest globally, So from an asset allocation point of view, you can have certain portion globally and certain portion in India. So you should have maintained that well balance within yourself. So our recommendation would be that 20% of your allocation can be towards global. Uh, that global you can consider the Nasdaq 100 index into consideration because of the benefit which I've already highlighted to you. From the CAGR standpoint also, the index has done pretty well compared to last 1 year. The reason being, which I've already highlighted, India was outshining all other indices. So in last 1 year, even if you see the recent performance of Nasdaq 100, it has underperformed Nifty. The reason being, we all know that Nifty is trading at all-time high compared to all other markets. So I just wanted to just go through these all companies. Like Apple, we all know what is Apple. So what are the products offered, and Apple being the largest holding of the Nasdaq 100 index, its market cap is near about $2 trillion. The weight in the index is near about 11%. It is into multiple technology, including MacBook, iPad. There are AirPods which are being offered by Apple. So Apple has got presence across globe, more than any other global countries. The Asian countries are more accepting the Apple products. So in India, if you see, there are people who accept Apple products. So the revenue generated by Apple from all global countries is massive. So this particular company is widely accepted globally. Microsoft, we all know that how spreadsheets and Word documents are integral part of our day-to-day work. So Microsoft is important from a professional or business standpoint. Amazon, I've already briefed upon, and its market cap is near about $1 trillion. Facebook, just wanted to highlight two important points. As we know that Facebook started with a social media concept, and after that it took over WhatsApp and Instagram. So these companies basically are not only pioneering their businesses, but they are also merging their businesses with other small businesses which can add growth to their overall business. Facebook is more vibrant over there because they have taken those social media which are very widely accepted. And Facebook, if you see from intergenerational point of view, it has been accepted not only by millennials, but it is also accepted by all age groups. So these companies are, they know the customer, they know the customer requirements, and Facebook is also generating a lot of income from the advertisement. So you must be seeing on the Facebook, there would be a lot of ads which they display. So a lot of revenues generated from that part also. Tesla, we all know Tesla are pioneers in creating differentiated models. Self-driving concept is also one of their important concept. They are also more environmental conscious. So it's a blend of innovation plus environmental conscious, which allows Tesla to be a part of the #1 auto or consumer related company. Even in India, Tesla is going to have a setup. So these companies create a model which is widely accepted. They will create certain models in India which is accepted from an Indian standpoint. So Tesla is also an important integral part of the index. Netflix, as we all are aware that OTT platforms are so widely accepted after the COVID period. So Netflix also generate their revenue from these subscription or streaming based services. So these were the few details of the top 10 holding. Apart from that, we have other holdings which are not highlighted here. Like we have PepsiCo, we have Starbucks. There is Zoom, PayPal, which is a part of the index. So we all are aware with these names that how these names are very important and integral part of our day-to-day activities. And because we are consuming it, the the revenue is generated to these companies, and this adds to the growth of the company. So this is a broadly this particular fund will invest in the index, that is the Nasdaq 100 index. The Nasdaq 100 index has a combination of all these companies. We have opened the NFO from September 27. We close on October 11th. That is on coming Monday. We suggest that from a asset allocation standpoint, you can have your 20% allocation globally. All the relevant details and the application and everything is available on our website. We can open the floor for Q&As.
Yeah, thanks, Shradha. Thanks for the insightful information on the fund. And so everyone, I think if we look out at the kind of global brands where we have the access today, like Apple, Microsoft, Amazon, Facebook, Netflix, and it is a time that with this particular fund we can also invest into such kind of a companies which have that kind of a global presence. So from the diversification perspective, we will recommend that we can have up to a 20% kind of an allocation into a US fund, wherein we can have diversification to our equity investments portfolio. And coming on to the questions, the first question is you already have a fund which is ICICI Prudential US Blue Chip Equity Fund, and how would you differentiate between that particular fund and this fund, and which is a better approach to invest into the US markets?
Okay, so one important differentiator is the US Blue Chip is a actively managed fund, and this particular product is a passively managed. So when I say passively managed, is that it will replicate by companies which are yeah, sorry. So it will take into consideration all the companies which are performing that 100. Okay, US Blue Chip, we recommend Rohit, hello. Yeah. So the differentiator between US Blue Chip and Nasdaq 100 is basically US Blue Chip is an actively managed fund, whereas Nasdaq 100 is passively managed. So it will buy, Nasdaq 100 will buy all 100 companies forming part of the index. In case of US Blue Chip, the valuation plays a very important role. So US Blue Chip will buy certain companies which are low on valuation. It will buy companies which are into financial services also, which Nasdaq 100 will not. So these are the basic differentiator. So US Blue Chip is more diversified compared to Nasdaq 100, but both have their importance from an US investing point of view. So both are unique, but both are important from your diversification point of view. So if you have already invested in US Blue Chip, then you can invest certain portion in Nasdaq 100. That is our recommendation from a US investment point of view.
Okay, the next question is that is it an ETF or it is a normal fund, and how the fund will realign its holding based on the market index? So I think, yeah, you can go ahead, please.
Yeah, it is an index fund. It is not an ETF. So unlike an ETF where demat account is required, this particular fund there is no demat account requirement. The index fund is similar to ETF except the demat account requirement and listing requirement. So the index fund, what will the index fund do basically is it will collect the money from all the investor like all active funds do, and it will invest in the Nasdaq 100 index. So every day we will get a file from Nasdaq that, for example, Apple right now is 11%. Tesla is say 5.5%. So what will the dealer or the fund manager will do right now is that he will collect the money from the investor and it will deploy in the percentage of each and every constituent of 100 companies, and he will buy those companies for, and it will align the portfolio according to the underlying index. So I will just repeat that it is an index fund and not an ETF, and there is no requirement of demat account.
So one question is there, like being it is not an FOF, and it is an index fund. So currently, how would you view towards like in the IT sector? If we have already seen there's a quite good run up has happened. So what is you towards that, being IT being the major part of this particular portfolio?
Yeah, so that's a very good question. So we all know technology is a very integral part. So the day when we all stop using the technology, it will stop creating revenue for these companies. So we all are aware that we are not going to stop using these companies for sure. So these companies are already a part of. So the example which I gave yesterday, 1 hour WhatsApp not working created a lot of turmoil around the entire world. So the day these companies stop working, the day you should remove your money from this particular fund. So we believe that technology will, and because these are innovators also. So when I say that they are not static, they know, they do their research, they acquire companies, so they know what the end customer needs. So that's very important. So it is not only technology, it is technology plus research plus the branding, which makes this product very beautiful and unique.
Can you throw some light on the tax implications of investment into this particular product?
Okay.
So on the long-term capital gains
From
side,
from an Indian investor point of view, the investor will be charged based on the debt taxation. So basically, it has got a debt taxation. So the short-term capital gains would be based on the marginal rate, basically your income tax rate on what you pay the income tax, and the long-term capital gains would be based on the indexation benefit which you get in the debt fund. From the fund point of view, the fund will have a withholding tax, which is on the dividend which has been paid by these companies, and the withholding tax is in the range of 25 to 30%. That will come in the NAV itself. So there is no additional tax which the investor has to pay apart from the debt taxation.
and just a subsequent question to this only, like if we have a debt taxation into this particular fund, and there are other funds which are present in the industry which are having less than 35% investment into international funds, those will be taxed at 10% kind of a come into tax 10% kind of a tax regime. So definitely, which would be a better way to approach international investing, whether through a 10% regime or whether through a 20% regime?
So the structures which are available, these are more on our active side, and which will be having say 65% India and 35% global. The risk and the requirement of the investor.
Okay, and what about the expense ratios which are associated with the fund, and how the overall charges, which will be including even the forex charges which could be involved while being an international investment?
Yeah, so currency, there would be forex implication, which will give impact on the NAV. So we are already managing US blue chip from 2012, and we have tie-up with a couple of brokers, and a custodian is Citibank, which is well known. So we are managing that piece. The operational piece would be very seamless. So that impact cost, so we'll try to maintain a minimal impact cost on the deployment. From the expense point of view, Rohit, the scheme expense, if you can just highlight to the audience, what is the scheme expense, including the brokerage?
Yeah, so definitely the total expense that we are looking out at in this particular fund is up to 1%. So that is the which is in the permissible limits of the SEBI, and that we are looking out at up to maximum 1% kind of an expense ratio into this particular fund. And the next question is, when does the rebalancing take place into this particular index? Is it an annual event or how it is happening?
Yeah, it's an annual rebalance which happens on the third Friday of December every year.
Okay. And the last question is again, while I think it's already done, that can you just throw the light on the underlying fund which is being investing? So I think just to clarify again, we are not investing into any fund underlying which is there in overseas. It is particularly an index. It is a Nasdaq index which has been listed over there, and we are investing into that particular index. So I think no more questions, and thanks Shradha for the session, and thank you everyone for participating into the webinar. And we all are looking out at your investments into this particular product, wherein you can talk with your respective HDFC Securities relationship manager and go for and look into that how this particular product can make into your portfolio. Thank you so much. Thanks for joining in.
Thanks everyone. Thank you.